So first, obviously, goes the disclaimer. Whatever we discuss today is not investment advice, and I'll leave this disclaimer on for a few seconds. It's just the standard disclaimer we use every time, and then we go forward. Welcome you all to today's session. Like I sort of promised last time that we'll try and do it every quarter, and this is the time of the year when I think we are all, getting into festivities. In Calcutta, we just completed Durga Puja, and from the beginning of Durga Puja till the end of the year, it's just one festival after the other. So everybody is relatively in a happy mood. Probably except a lot of the investor folks because of the uncertainty and what is going on in the markets. But nevertheless, wishing you all a very, very happy Durga Puja, Dasera, Diwali, and all, have, wishing you all a great time for you and your family. So let's get started. So this is a quote that I have with me, and I keep. So I keep a collection of quotes in my OneNote, and this is there very prominent, and it keeps reminding me that investing is more about emotions than rationality. Right? It's ideally it should be more driven by numbers, but in reality, it is more driven by human emotions as at an individual level and also at a collective level. Markets go up, markets go down. Ultimately, what we take out of the markets is based on our mindset, our investor psychology. So that is something that we need to always keep in mind when we uh, think about investments, think about investing, uh, and portfolio building, etc. Anything to do with investment, ultimately you will realize that it is mostly about the psychology. And I keep saying this, Pareto's principle works here as well. 80% of investment is psychology, right? The two people who can start off, identify a particular company, buy it at the same price, but can have vastly different results because of how uh, one person thinks differently from the other. So let's look at what is happening all around us. First, let's look at this. This is the quarter two which is going on. So let's ignore this because this has just started and the number of data points is very small. But if I look at the last four, previous quarters, you will see that growth at the sales level, the revenue level, and the PAT level has been quite dismal. So basically, we've not crossed even 10% PAT growth in the last four quarters, and in fact, it's actually been quite poor with 6%, 6.5% in two of the last four quarters. So obviously, uh, the numbers, the fundamentals have numbers in terms of growth has not been strong. What has happened in the market? Obviously, we've seen a bear market. And here, if you see the last 1 year, it's basically everything is pretty much in the negative. I think there's only one positive, which is, the bank Nifty in the last 1 year. This is October 1st to September 30th. So basically the last 12 months. The only one which is in the positive has been Bank Nifty, and that too just barely. Everything else has been poor. If you see the last 6 months, nearly everything positive, and one of the reasons is that there was a pickup from April to June, and then you see again last 3 months again has been negative. So basically, it means that the market has been topsy-turvy. It's been going up and down, and right now we are sort of stuck in a range, uh, roughly 24,000, 400 to 25,000, 600, 700 is the range. Today we are very close to 2,000, 25,500 odd levels, but we have been in this range, and now the market is trying once more to break out from these levels. From a factor perspective, let's see what has happened. If you see, obviously momentum has been the worst performing, and that's again by the nature of the strategy that is there. Momentum works very well when a market is in an uptrend, but when the market goes sideways or when the market is falling, then any kind of momentum strategy, whether it's large cap momentum or mid cap or small cap, or even sort of multi factors like combining momentum with quality across market caps, nothing works. If you see, it's been if you look at this, you'll see that the largest uh, cuts have come in the last 1 year has been from the momentum oriented funds. Conversely, if you look at the longer term record, 5 to 10 years, you will also find that momentum as a strategy tends to give you the uh, best returns across all strategies. So, long term, fantastic strategy. Uh, Short term, last year it has not performed, and this is true for any strategy. There's going to be strategies which has not worked for which will not work for some time, and there will be strategies which will work for some other time. So if you look at, say, for example, value, value has not worked, or value had not worked for many years, and now last 1.5 years, it's actually performed reasonably well. I mean, not exactly the last 1 year, but the 1 year previous to that, value actually performed quite well. So net, momentum has been struggling as a strategy in the short term. Longer term, we continue to see that momentum tends to outperform other strategies. So uh, the the takeaway from this is that there is no single uh, style or single factor that works all the time. So whenever you are investing in the market, you need to keep that in mind. And that's intuitively also obvious, because if something did work all the time, then everybody would be doing only that, and that would in turn erode uh, the edge of that kind of a strategy, right? If something works all the time, then everybody would be doing it. Now let's come to what is happening all around us. So obviously, what we are seeing is global growth has slowed down significantly, and we have pretty much, I think, the U.S. President and the U.S. administration to sort of not blame, but they are primarily have been responsible for something like this, because what they have done is they've brought in uncertainty into the mix, right? It's the constant fluctuations or changes in stance, in tariffs. So the term that uh, you know I think FT or Wall Street Journal coined uh, was TACO, right? Trump always chickens out, uh, was basically because that of the frequent changes of policy, and that has created uncertainty in across countries, across economies, across businesses, across investors in businesses. I'm not talking about stock market equity investors. I'm talking about people who are sort of capital allocators in businesses. They are also now not sure, right, where to put up the firm or where to put up a new factory, because today there is some law, tomorrow it might be different. When state policy is being run on social media, it's very difficult to create and formulate long-term economic policies or business policies. So That's been a reason why I think growth is starting to slow down. There's been significant disruption in global supply chains because of tariffs and continuously changing ones at that. So we have to sort of just continue with this. Uh, my sense, and last few months, whenever I've been on TV, I've been saying this that. The rate of change is going to slow down. Rate of change of these tariff announcements, these uncertainties, it is going to slow down. At least that is my expectation. Uh, the number of the frequency with which the announcements were coming earlier in the first 6 months of the presidency, that is starting to drop because most of the things that was supposed to be done has been done. Now it's going to be incremental tinkering from here on. So my expectation is in the next 3 months, next 6 months, things are going to settle down on a policy front, uh, hopefully, and then things will get back into some semblance of normalcy. Amidst all this, India has been one of the worst performing global markets in the last 1 year across not only emerging markets but across most of the larger markets. And if you see, we've been underperforming even the MSCI emerging markets index, and we've been underperforming uh, pretty much all major uh, stock markets in the world. Yet our market cap to GDP continues to hover around all-time highs. One of the reasons for that is that we continue to get newer players, a huge number of IPOs which are coming in into the market, which is increasing the market cap of the total listed entities. So that's one of the reasons. And the other is that valuations, if you see, they have not sort of corrected meaningfully across board. So that's also another reason. Uh, like I said, the weightage of India in the emerging markets MSCI index has gone down significantly. It was 18.9% last September. This September, it's come down to 15.5%. So a significant drop uh, in the uh, even within the emerging markets basket. So which basically tells you that money has been sort of flowing out of India as well. Like I said, if you see now in the last 1 year, the, the valuations have sort of tapered off. We are now uh, close to 10-year median valuations. This is BSE 500. We are now at a PE of 25.2 versus a 10-year median of 25.4. Pretty much the same thing with Nifty Mid Cap 100, where we are today at a PE of 34 versus a 10-year median of 31.4. And exactly the same with small cap 100, where we are at a PE of 31.3 and a 10-year median of 31.1. But if you look at the last period, you will see that the valuations are stable. It's not that we have corrected significantly. The other thing is, the last few years, we've started seeing significant reduction in holding uh, in from FPIs and FIIs. So last 12 months, this is, if you see the contrast here, you will figure out that the domestic DII flows have pretty much offset the FII flows, and FIIs have been consistent sellers in the last 12 months, and not consistent and very heavy sellers in the last 12 months. And like I said, a lot of IPOs also have been coming. So there is, if you look at the IPOs, the boom, this is something which is very, very significant. And I've just sort of listed down the top 20 IPOs that have come in just this year, and we're now in the 10th month. We still some time to go, but we've already seen companies like Tata Capital, uh, LG Electronics, Hexaware, NSDL, JSW Cement, WeWork, Ather Energy, lot of these urban company. So a lot of these known brands, come to the market. So uh, one way I always believe that IPOs are good for us, even though I'm not a very strong proponent of investing in IPOs. Uh, so let me take it one by one. So the reason why I like IPOs is after say a year, you get so much more variety, and India is in that way one a standout in the emerging markets, because the variety of companies available, businesses available to invest in is actually very, very significant. If you compare Indian market to, let's say, a South Korean market, you will find that the South Korean market is just handful of stocks. Same with South Africa, same with Brazil. So there is very little variety. But in India, you have completely different kinds of companies of different sizes, different pedigrees, uh, who are part of our listed entities. So that is one thing which is very, very good about having IPOs. The reason why I personally don't like investing in IPOs is most of the time, right? What happens is there is a lot of window dressing that happens with the numbers, polishing, etc., to make those numbers look good. And then immediately 1 or 2 quarters after listing, we find that uh, a lot of uh, the polish comes off. There's some negative things which come in. Growth drops off to compensate for some, for the growth that was shown earlier, etc. So reasonable time frame to look at IPOs is probably 6 months. Give it a couple of quarters, maybe 2, 3 quarters for the company to come out with uh, quarterly results post IPO. And if a company is really good, uh, and worth holding and buying and holding for the long term, then a couple of quarters would not make that big a difference. Uh, so that's been my philosophy of IPOs for a long time. If you see the kind of euphoria we are seeing right now, uh, with say an LG Electronics, uh, uh, 11,000 crore IPO getting subscribed more than 4 lakh crores. It tells you about the frenzy, the euphoria that we have in the primary markets. My guess is there are two things which is happening. Obviously, one is there has been a very, very long standing IPO flipping market that we have in India. People tend to continuously uh, uh, you know buy and book profits on listing or a couple of days within listing, and that's been a practice. So and I know a lot of people who do that. The other thing is, I think because of the restrictions in the option market, so people who are quote unquote playing the options market, a lot of them have uh, sort of had to stop doing that because of lack of capital, etc. And they are now getting into, or they're now more into this IPO flipping market. So uh, something always that we need to be careful about whenever there is irrationality, whenever there is exuberance in any pocket of the market, we need to be careful of what's going on. I know of a lot of people, or uh, I've heard stories of people who are just blindly applying to IPOs, not even knowing what the companies do. Uh, we've had this kind of IPO application frenzy in the SME market for 2, 3 years now, and this is also now happening in the main board IPO. So something to be cautious about and something to be aware about. Now, what is the other thing that is happening in the macro front is that inflation is now sort of fallen off the cliff. And last 4 quarters, maybe, pretty much last 6, 7 quarters has been very, very low. Last 4 quarters have been really low, less than, close to 2% or less than 2%. This last month it came at 1.5%, which is very, very low, even from the expectations of the RBI. So what it basically implies is that it now gives, or it gives the optionality to the RBI and to come out with rate cuts. My guess is that they will hold on to the rates right now and maybe wait for the US tariff situation to play out before they actually cut the rates, because they would want to have some firepower with them to sort of handle the tariff situation if something untoward would tend to happen. Now I come to another segment, couple of data slides that I thought I'll walk you through. This is a very interesting set of data, which is a 5-year rolling returns of large, mid cap and small cap indices. So basically a group of large cap, mid cap and small caps, and you basically are looking at a 5-year rolling return. So anytime within anytime you are investing, and then you're taking a look at it 5 years later, what would have happened. So what is interesting here is, if you look at the data, is you will find that mid caps have outperformed both the large caps and the small caps over a 5-year rolling returns period. And if you look at the 10-year rolling returns of the same, you will find exactly the same thing, right? I'll go back and forth a little bit. So if you look at, say, 5-year, it's like 13% for the large caps, 16.2 for the mid caps, and again, roughly 14% for the small caps. And again, you see exactly the same, right? Same set of numbers for a 10-year rolling period. Now, what you see here is there are two takeaways from these two slides. One is that if you look at the minimum, so this is the worst case scenario, right? That you could have done on average if you had invested over a 5-year period, is that you could have lost money in the worst case. So even if you had a large cap or a mid cap or a small cap, over a 5-year period, you could marginally lose money. Over a 10-year period, what it tells you is that you would not lose money on average, right? Which is something very interesting. It may not be a great return. You probably not investing in the markets for a 2.5% or a 5.5% or even a 7.5%. But this is like the worst case scenario that you could have landed up with. The maximum, of course, has been quite respectable with 18, 23, and nearly 22%. And similarly, if you see here, the maximum here is significantly higher, because we have seen one very good year in the last 3-4 years. I think last 1 year has been bad. The 1 year previous to that was very good. The 1 year previous to that was not so good. So in the last 3 years, 1 year has been really, really good. 1 year has been flat, and last year has been poor. So people who read my investor letters, etc., that I always talk about the 1 in 4 concept. So 1 year out of 4 years you will lose money. Probably that was last year, and we'll have to see how it plays out over the next 5 years or the next 10 years. So 2 takeaways. One is that if you're investing in equities, you should have a time horizon of greater than 5%, greater than 5 years, to get to be on the safer side. And the second interesting thing is that over time, mid caps tend to perform better than large caps and small caps. Now, it's understandable why it performs better than large caps, because obviously large caps are by nature large, and it's difficult for them to grow as fast as mid caps. But why is it more than small caps? A very simple reason is when you look at the data, you will see that the distribution or the variance in returns in small caps is very high. There may be, for 34% companies who have done phenomenally well. Maybe 20% companies have done okay, and 50% companies have done very poorly, right? So then it tends to balance out and sort of cancel out the good performers. So that's one of the reasons why small caps as an aggregate tend to underperform mid caps. Mid caps is in that Goldilocks sweet spot where they have grown beyond being a small company. They now have the resources, the management, the quality, etc., and they are able to grow faster, handle competitive situations much better. So obviously they tend to do better. So these are the two primary takeaways from these two data points that we discussed. One is you should have a time horizon of greater than 5 years, and second is that over a longer period of time, as a collective, mid caps tend to outperform both the large caps and the small caps. This slide or this set of data is also again very, very interesting. It shows you year by year the maximum drawdowns that uh, has happened across large, mid, and small caps. And what this tells you is that every year, there's not a single year where you see that the market has not seen a drawdown, right? You look at, say, the calendar year 2023, which was actually quite good. Even in this kind of a year, I think 2017 again was a bumper year. 2014 was a superb year. You see that even in those years, you've seen a drawdown of 6, 7, 8, 9%. Same year, roughly 10%. So every year you will get some kind of a correction. In a bad year, you get literally clobbered, right? This is 60% down, 70% down in the global financial crisis. Similarly, this was COVID. For people like me who's been, who was there, who lived through global financial crisis, pretty much every other big market fall uh, doesn't feel the same. It's always scary. It's always gut wrenching. It's always extremely bad when you are losing money. But the kind of uh, crazy fall that we saw in 2008 is something that you have to live through to sort of understand uh, and keep in your memory. And even with that, even after these kinds of drawdowns every year, this is the log chart of the Nifty, and this is true for all indices, even broader indices like a BSE or an SE 500. We see this rightward, upward march of the markets. So you've seen these, if you look at these numbers, it's been sharp cuts, deep cuts every few years. But if you are able to just sit through, like I said, if your time horizon is greater than 5 years, you will find that the this uh, this journey is very, very rewarding. Uh, Obviously, this, if you look at because this is a log chart, the slope here makes gives you an indication of the sharpness of the rise of the rally that we saw uh, during the global finance. I mean, during 2004 to 2007, probably the best bull market that we've ever seen in India. Prolonged bull market for 4 years. Uh, we've seen sharp up moves post COVID as well, but they were for much smaller duration. If you look at from the COVID lows to now, it's roughly about 3 times over a 5-year period. But if you look at this is like a 6 6.5 times in a 4-year period. So, or 3.5, 4-year period. So phenomenal wealth creation happened here. Again, a very good, decent amount of wealth creation happened here. But the takeaway from this is that this journey is going to be like a roller coaster. It is going to be like this. There are going to be ups and downs. But if you are able to stick through this, the journey is very, very rewarding. Now let's take a slight detour and look at what is happening at an industry level right now. This is last 1 year. If you see, there are only 5 sectors where the price or the stock, as at an aggregate, has given positive returns. First, maybe 3, 4. 4 I'll ignore because less than 8%, is not really positive in the sense that it's pretty much par for the course. Even the top one, is 16, 17%, which is also not something which is great. So this obviously, is a reflection of how tough the market has been. More recently, we are starting to see net profit growth year on year, for quarterly profit growth starting to inch up across sectors. So this is something that we need to keep monitoring, keep looking at. Again, this is the annual profit growth. This is the quarterly profit growth. Annual profit growth has started coming in for a lot of these industries. A lot of these companies have a healthy ROCE, good growth coming in. And also the balance sheets, I think the debt to equity across board for all listed companies has significantly improved. We are probably at a 10-year low in terms of overall debt to equity. So overall balance sheets have improved. Growth is beginning to sort of come back, which is what makes me believe that the markets are looking poised for recovery. And what are the factors that are going to drive this recovery? Obviously, GST rationalization is very, very critical amongst that. The taxes that was reduced obviously is going to produce more disposable income in people's hands, and once people are sure of their incomes, their household savings, etc., they will start sort of spending more. Gold prices have doubled over the last few couple of years, and there is this indirect wealth effect that it creates, because every household in India has some gold, and when prices go up, even if you are not selling the gold, you at least have the view that now my savings, or now my gold that I have is worth much than what it was maybe a year or 2 years back. The kicker, I think, that is going to probably kickstart the next phase of the bull market is any reduction that we see in the US tariffs. When it will happen, nobody knows. I am not sure even the US president knows when it will happen, but my guess is it will happen. And if it comes down from the current 50% to maybe 15, 20%, 25%, that is going to be a big boost for the markets, because I don't think that is currently getting priced in. The reason why, if you look at the financial impact of the tariffs, it is not much. If you look at the exports that is currently being tariffed, it's roughly 2.2% of Indian GDP, which is not much. But there is this overhang of sentimentality. One, that can it spill over to IT or services in general, because any change to IT is going to impact India very, very badly, because not only is IT a very large large export and large source of foreign currency, but it also provides employment to very large number of people, which is actually, sort of creating the consumption boom, because it then spills over to other industries, other service industries, real estate, etc. So if you look at, say, a Bangalore or a Hyderabad or a Pune, uh, large, I mean, maybe again 80-90% of the real estate demand is basically because of IT, right? So the spillover effect of the Indian IT industry is something that, uh, something which is which cannot be sort of, uh, we cannot ignore it. In fact, I remember this topic was the first time when I had written for a national newspaper. This was the topic. I think it was 2000, maybe 5, 6, when I had written this article about how Indian IT is actually going to drive the Indian economy in indirect ways. The two, three main theses that I had. One was obviously uh, the high salaries then. It's not the case anymore. Uh, but even in 2004-5, the entry level salaries of IT was multiple times that of other industries that was there. So, uh, so high paying, large number of people were getting jobs. So that was going to create a impact of consumption. And the second thing that I wrote about was we were for the first time getting a lot of young people. Uh, we were getting these people go abroad on on-site assignments, and a lot of them coming back. And when they come back with two things. One is obviously they came back with dollars or euros or pounds, etc. But more importantly, they came back with aspirations of global products and services. So, the expectation of a large number of people got, sort of, they started expecting uh, goods and services that they were used to. So, why can't we have a McDonald's here? Why can't we have a coffee chain here, etc., etc.? So that was one of the uh, major drivers of economy pickup in India, if you see. And today, the fear or the uncertainty is that if that entire industry is taxed or is tariffed in some way, how will it impact India? So that is a fear. Uh, Pharma, again, I believe that it's going to be very difficult to tax or tariff Indian pharma, because we are the cheapest producers of medicines, and globally that is what is required. I think the challenge is more for the uh, patented formulations, because the pricing is very disparate uh, between US and other countries where those patent drugs are being sold. So sentimentally, I think US tariffs is something that everybody is going to be watching out for. Even big investors, global investors, are wary of the fact that they're sensing that India is now directly, indirectly on the top or very close to the top of the hit list of the US administration. If you look at the kind of narrative or the kind of sound bites, news bites that uh, the US president was making, the Treasury Secretary was making, and pretty much everybody, right? There were always something against India, etc. The last couple of days, I think now that is also changing, and now it's again, the gun has been turned towards China. Uh, but you never know, right? I mean, it can again, next 2-3 days, it can turn back to India as well, and it's just that roller coaster ride happening all over again. So tariffs is the big joker in the pack. Uh, Continuous government investment in defense, railways, roads, ports, highways, etc. That is continuing. That is picking up, in fact, and that uh, is actually driving a large part of the growth in the last couple of years. Private capex has not picked up as yet, understandably so, because consumption and capacity utilization has not yet reached that level. So it's being currently driven by government investment. Like I said, inflation is low. If we have a few more months of low inflation, then people will start becoming more confident and probably start spending a little bit more. I've been speaking to companies. I've been speaking to some folks who are in the retail, who are in banking, and pretty much across the board, people are saying that there has been a huge boost post this GST cut and for this festive season in terms of consumption, uh, in terms of credit, loans, etc. There's been a big boost, but we'll have to wait and see how that translates into numbers. I'm sure it's not going to come in this quarter's numbers, but next quarter numbers we uh, need to look more carefully as to what is happening. But there is definitely a boost that is coming in. Good monsoon, good agricultural season, is helping the rural revival. Uh, and obviously there is significant interest and investment happening in the new age sectors, whether it is solar, whether it is semiconductor manufacturing, whether it is mobile manufacturing, etc. And okay, so, and in all of this, what should investors do? So first is obviously, like I always say, that to be a good investor, you have to have a bulletproof mind. You have to work on your psychology. Stoic mindset is going to be the most helpful if you are going to be investing in the markets for the long term. uh, you should not uh, be despondent during bad times. You should not be euphoric during good times. Both are part and parcel of the process. There will be good times, markets will reward you. There will be bad times when a part of the reward is going to get taken away. There is no one on uh, in the last maybe hundreds of years of investing history who has only seen one side, who's only seen profits and never seen losses. It's never happened. It is never going to happen. Right? There is no system. There's no strategy. There's no person who's been able to do that. It's not possible. You cannot buy at the lowest point and sell at the highest point. Uh, do not leverage your portfolio. Don't borrow. Don't do FNO unless you have a systematic process and you know what you're doing, right? Don't borrow and invest in equities. Uh, if you are doing an SIP, whether it is in your individual stock portfolio or in mutual funds or in your PMS, whatever, right? Continue doing it, because end of the day, the return, the absolute amount of money that you make is a function of the capital that you have. So if you make a 20% return on 100 rupee, it is you're going to make 20 rupees. If you make the same 20% on a 500 rupees, you make 100 rupees, right? So uh, it's very obvious, but something that people tend to forget or people don't realize the importance is when markets are bad or when things are bad, people actually start thinking, get scared. But if you continue with your SIPs, uh, one is obviously you you are more disciplined, and the second is your overall capital in the pool goes up, and when the market turns around, as it eventually will all the time, because ultimately we are in India, we are a growth economy, right? We will grow, uh, and as businesses grow, as the economy grows, the market will give you returns. So with the more amount of capital that you are able to put in, as and when the market turns and it goes up, the returns, absolute returns that you will get will tend to go up. With that, let me sort of one sec. Let me go back and stop sharing and go back and get into Q&A. Let's see if anyone has posted questions. Okay, so there's Mahesh, you have raised your hand. Maybe you can ask your question. You unmute yourself and ask the question. So you can either unmute, ask the question, or you can put it on the chat box, and I can take them one by one. Okay. Since Mahesh, you're not asking, let me start with the question that is there already. So there's a question from Kanchana. Question on Genesis, the challenges it is facing on profitability also. So let's not take individual stock-based questions. I'll tell you why I don't want to take individual stock-based questions. One is because if there is a change in stance that we do, we will communicate it to all our members. But I don't want to comment on a stock and then get biased by whatever I say. If I say that, a stock is great and then tomorrow we have to sell it, then I don't want a cognitive dissonance in my mind. And I'm sure that our team also does not want that. So we'll avoid, stock-based questions. Uh, in general, let me, to talk about the industry. I think geospatial as an industry is at the cusp of very, very big things. There is huge amount of focus across board from various industries. Initially, it was only the government that was looking for it. So I'll give you a sort of data point that right now the government has asked 100 cities in India, the top 100 cities, to have their entire uh, land map, the corporation, the municipality map to be made in 3 dimensions, right? And I think right now Jaipur has completed it. BMC, Bombay has been doing it, and I think there is one other city, and I'm forgetting which one, that is working on it. But maybe a few more. Let's say even if there are five, there are 95 other cities which are going to be doing this. So this is from the government. There is huge amount of work happening on roads, roadways that is requiring geospatial mapping, on works that requires geospatial mapping. So this is something which is going to get used more and more, right? So there are multiple players right now in India. I think there are 4 listed players, but that is just the tip of the iceberg. There are probably around 15, 20 small size, mid-sized players. Uh, but the opportunity size is very large. How individual companies will perform, we'll have to wait and see, right? So let's see how it goes. So that's about Genesis and the geospatial. Uh, we have a few people who have raised their hands. Maybe let's go with Kapil, if you want to unmute yourself and ask the question.
Hi, Abhishek. Thank you for the opportunity. Just I have one suggestion that, like how you have spoken about Genesis, like in terms of opportunity. So it is very difficult to extract that story from the report which you share. So if one or two pager can be just spent on a story kind of a thing, like how opportunity, because I have also going through Genesis, and I've read all those things on Value Picker forum, wherever I can find extract the data from Map My India or all these things, but I could not get what was the actual reason, like what's the main reason for investing in such a company. So it can be more of a storytelling, then it would be helpful for us. Thank you.
Fair point. I'll convey this also to the team. Uh, Fair point. Okay. Thanks, Kapil. So there is Dharmesh. If you want to unmute yourself.
Yes, actually, I'm interested to subscribe the small case, and I also saw your internal page. There is a dedicated service. So first thing, in small case, you are having only 30% stock and 70% cash. So that's why I was wait and thought talk to you in a meet that before subscribing that why is so much cash
So that
is
is
there.
probably, if I'm not mistaken, that is probably in HitPix if you're talking about. So
Yes.
HitPix
On,
is a strategy where we have roughly uh, 8 to 10 stocks, and at any point, that is the maximum number of stocks we hold. And if the number of stocks is less than that, the remainder is in cash. So that's the way that particular strategy operates. In most other strategies, like the long term, quant, etc., if all the others, we are pretty much, I think, 80-90% or fully deployed, if I'm not mistaken.
okay, and what is the main difference between small case and the direct advisory hit picks if I subscribe to
Both are the
the
same.
report?
Both are the same. It's just small case is easier for some people to execute. Uh, Individually, you'll have to sort of take the actions yourself. That's the main difference.
Okay,
Oh,
so
the
in report,
other
so
difference, I
in
think, in small case you don't get the reports. It's just that the stocks are pushed out, and in the email based service you get the write ups.
so in report based service, do you mention the percent allocation in each stock?
In each service is different. I'll have to remember. I think HitPix, it's a standard is about 10%. So whatever your allocation to that strategy is, you should take 10% and invest 10% of your capital in that. So if you say you want to invest 100 rupees in HitPix and you get a recommendation, you put 10 rupees in that.
Okay, got it. Thank you.
Thanks. Uh, Kapil, have you raised your hand once more, or it's same? I'm not sure.
No, I am not raised the same.
Okay, fine. That's fine. So Ganesh, you've raised your hand.
Yeah. Hello, sir. Just continuing on the query raised earlier on HitPix. I'm a subscriber to HitPix.
Mhm.
I'm just using this stock name as a placeholder. I don't need a specific reply with regards to the stock. For
Then
example, if
just
you have a
say
very
StockX. Hmm.
StockX, for example, if you have a StockX which you are very fundamentally bullish on, which I know kind of you are from some other strategies, and that stock clearly has gone into momentum. But I am not seeing that stock in HitPix. So just wanted to understand the HitPix philosophy via this example.
So
So
see,
what prevents that
basically
stock
what
into coming?
happens, yeah,
Yeah.
yeah, yeah. So basically what happens is that each strategy is designed slightly differently. So long term has a different thought process. HitPix has a different thought process. Uh, Quiver has a different thought process. Q10, Q30 each have different thought processes, strategies behind it. And you will find that in most cases, the overlap of stocks is very minimal, right? In across each of these. So people who have multiple subscriptions, they'll probably have seen this before, that there is very less overlap between each of these services, precisely because the time frame, the thought process, the strategies are complete or are mostly different. So when we are entering something, what we are looking for, say for a long-term perspective, is different from what we are looking for in say a momentum perspective, is different from what we are looking from hit picks kind of perspective. That is the main difference. It's not So for example, I've been bullish on HBL for donkey's years, for example, right? But HBL has not been in hit picks even during the terms when it was going up, right? But it has been in long term since I think it was whatever 180, 90, 100 rupees. I don't remember, right? But the rationale for having it in long term versus having it in hit picks is different. That's the thing. Very
So
difficult,
my
honestly, to explain why it is
okay,
different.
okay.
But
Yeah,
the
yeah, yeah.
idea is,
So my query was with regards to HBL only because I know you are bullish on that from a fundamental perspective, and
Hmm.
it clearly has come into momentum recently. So I was just wondering what factors, or can you see what factors is preventing HBL into coming into HITPIX? I mean,
Oh,
I
see,
know that it is a very
there is no,
quant-based
no, no. So
system.
there is no. So HitPix is not really quant based. The other quant and quiver is HitPix is more, discretionary techno funda where we actually go through technical charts and fundamentals manually. So it's a different kind of pickup. But the idea also, I mean, to an extent, is to keep it separate, right? In the sense that uh, we have a lot of subscribers who have long term, because which is like we started off with it. So probably 99% of our subscribers have long term. So uh, maybe at some unconscious level it works that because it's already there, we don't want to replicate it, because a lot of investors may not want to buy the same stock all over again, right? So
Got it.
i i I don't know whether that happens consciously with us, but maybe it does. I don't know, to be honest.
So this becomes kind of a satellite portfolio for the HitPix becomes kind of a satellite
Not
portfolio
really,
for
but if you
people
if you
in.
look at if you look at the returns, see the logic here is long term is where we are buying and holding, even through ups and downs. If you look at hit picks, we are actually buying the moment it hits a target, we get out. Moment it hits a stop loss, we get out, irrespective of fundamentals. There have been many stocks where we are fundamentally very, very convinced, where we have got in, where we've ridden it, and then the target has come. And personally, I may be very sure that it will go even higher from there, but we've exited because that is the strategy. That is what we are looking for, right? We are looking for 25, 30, 40% gains in a position, because that needs to be offset. That kind of up move is offset in those cases where it makes losses, right? There are stocks that we recommend, then where it doesn't go up and it falls, and we get out at 10% 12%, 8% loss, right? So that loss is sort of subsidized by the profits that is made in some other place. So it's a complicated uh, situation. There is no formula behind this, to be honest. It's more a judgment call that, okay, uh, and most of the time, I'll tell you what happens is, uh, in hit picks, we are actually always trying to look for new stocks, uh, stuff which is already there. We know that, okay, ठीक है, वो तो चलने ही वाला है. But in hit peaks, in other, when I'm running my quant screens, I'm actually trying to look for newer ideas, something which uh, which we can study, which we can profit out of. And I also use hit picks, quant, and a lot of these things as input filters for me for long-term stock selection. That a lot of times I get these ideas from there, and then I study it and I like it, and I feel that ठीक है, this ये तो long term में आना चाहिए, kind of thing. So I honestly, I probably have not been able to answer your question very well, but this is how it is right now.
Got it, sir. Got it. Thank you so much.
Thank you. Okay, who else has put up their hand? Let me see. Then we'll go back to the questions in the chat. I can't see any other hand raised as of now. Okay.
Sir, I have raised my hand. Can I
Yeah,
go?
yeah, yeah, sure.
Yeah, sir. So, I
So this is
wanted to
Siddharth,
know if you
right?
have any thoughts on the.
Yeah,
Yeah, Siddharth.
yeah. So,
Yeah, if I wanted to know if you have any thoughts on the rare earth supply shortage that is occurring in the Western world due to the Chinese policies, and Like, moreover, can the 100% tariffs that have been imposed lead to any opportunities for Indian companies if those tariffs aren't removed in the short term?
You tell me one or two companies in India which manufactures rare earths in quantity that can benefit.
I can't think of any
कोई नहीं
from
करता.
such.
So the entire rare earths thing is something that we read in newspapers and unfortunately can't do anything about it. तो वो theoretical ज्ञान ही है अपने पास और कुछ नहीं हो सकता उसके आगे. There are companies which will put stuff on their annual reports. I don't know how much they are doing. So, for example, right again, GMDC, they keep writing about it in their annual reports. I don't know actually how much they've done in the last 5 years, 10 years. They've had these mines for many years. What has happened with them? I don't know. I don't have an answer to that. So let's see. I mean, if something happens, we'll figure it out. Then we'll invest. But right now, I don't think there is anything that is happening beyond theory. That is one. The other aspect also is I have not yet seen any major shortage actually coming through and disrupting, the production in anywhere. If you look at last quarter, Bajaj Auto said that they may have to stop production in a month or whatever. Have they stopped production? They are doing record production. So I don't know what is real and what is the story. But ultimately, in terms of actual delivery, we're not seeing any meaningful impact, at least as of now.
Makes sense, sir. Makes sense.
Sir, I'm Mallikarjun, sir.
Yeah.
Sir, outlook from the current point of view, this gold and silver, how to invest in gold and silver in present scenario?
So very difficult question to answer, especially after such a sharp up move. But see, my sense is that, and I like Rakesh Jhunjhunwala used to always say, I reserve the right to be wrong. I think that both gold and silver are headed higher. Are they headed higher in the short term? Gold, probably the answer is no. They may gold may consolidate at these levels for some time. Silver may continue to move up for some more time till it sort of gets back into parity with gold. Medium to long term, as long as this global uncertainty continues, uncertainty both in economic terms, in geopolitical terms, I think the migration of central banks, large institutional investors towards real assets is something which is actually happening. And for somebody like me, I believe in trends, right? So if this is a trend, it is going to continue till it stops. So why sort of try to sort of say that it's going to crash and things like that? I honestly don't see. I don't know whether gold and silver can double from here. Let me put it this way. But will they be higher in the next 5 years from where they are today? Probably. I mean, that's the best answer I have. Beyond that, all these precious metals, etc., are based on demand and supply, and demand and supply is something that nobody knows about. These things do not have any intrinsic value. It does not have a cash flow, so it's purely speculative asset, right? So, but it is real. Gold has been a store of value for millennia. It will continue to be so. So that's the way it is. I don't know, or whether we should buy gold at these levels and expect very high returns. My personal sense is that, say, a year down the line, so this Diwali to next Diwali, I think, again, reserve the right to be wrong, that equities will be doing better than gold in the next 1 year.
And holding gold, it may give sense for hedging our portfolio also.
Yeah, see gold, if you are holding it in physical form, that is a different thing versus holding it in, as an ETF or an index fund, etc. Because my experience in my own family as well as my friends' family, etc., is that if you are holding gold in physical form, you cannot sell it, right? Nobody in your family is going to allow you to sell it most of the time, right? So it is there just for you to look at it and believe that I am now richer than what I was yesterday, but it has very little economic value until and unless God forbid there is some real emergency in the family. If it is in demat form, if it is as an index fund or an SGB or something else, then you might be able to sort of sell it and get a higher price return, etc. But yes, in a sense, it is a hedge to all the crazy things that's happening in the world.
Since I'm holding SGB since 2021, 22, all the SGB series 1, 2, 3, 4.
Great,
Now
great.
the good profits are almost nearing double.
Yeah, I
Since
mean,
I'm-
people, the government of India is crying and you are laughing. So, you got the better of government of India. Yeah.
Correct. Whether to hold it or sell it, sir.
Why? I mean, if you don't need the money, why would you sell it? And see, ultimately, these things are very difficult to sort of comment on because it will depend on your overall asset allocation, your risk appetite, your objectives, etc. Right? I mean, as an external person, without knowing anything about you, about your circumstances, it is probably not right for me to comment. But if what I can say is what I would do if I were holding SGBs, I would not sell. I would just sit on it and wait.
Comparing the returns from the past 5 years and the future, we can't expect that much returns.
No, that is not possible, right? I mean, it's absolutely impossible to get the returns that gold has given in the last 2-3 years.
We can't
In the next 2-3 years.
Correct.
That's so next. I think 2-3 years, equity is probably going to do much better.
Okay. So probably we have to do more allocation towards that.
That's what I would do. See, I am as a person, individual, I'm always more inclined towards owning businesses because end of the day, over longer periods of time, over 10, 20, 30 years, it is businesses which will grow, right? Ultimately, I don't know, the days of the Maharajas, etc. is over. But today, if you look at who are the richest people in any country in the world, right? It is people who own businesses.
Right.
In India, it is Mukesh Ambani, it is Gautam Adani, and everybody, people like that. Every country, you go country by country, even in the poorest country, it is going to be people who own businesses who are the richest. And that is not going to change in the next 20, 30, 50, 100 years. That's always going to be the case.
Right. Thanks.
Hi, Abhishek. Urmil this side. Can I go?
Yeah, sure.
Glad to reconnect with you and thanks for the opportunity. I have 2 questions, if you don't mind. On the hit
Yeah,
pick,
speaking to you after a long time.
a very long time, and it's so good to hear your voice and so good to see you again. On the hit pick side, I was just curious that do we consider stocks like which has earning breakout, which has 3-4 quarters play in them. This year, as you will be well aware, that in spite of so much of volatility, there are some stocks which has given outsized returns, and that was purely because there was good earning momentums. When I look at any of the hit pick stock recommendation, there is always a snippet on the fundamental side of it as well. So I'm sure that fundamental side is considered, but I was just curious to know that do we consider not any stock discussion per se, but I mean Force Motors.
Yes,
as well.
absolutely. We definitely look at companies where earnings is expected to be very good. But one of the key things that we look for in hit picks as a style or as a strategy is companies which are fundamentally sound and which is sort of consolidating and which is expected to, go up. So you will rarely find stocks that is already in a strong momentum, uh, uh, as part of FitPix. It's mostly stocks which have, either very strong technical, patterns, or stocks where there is consolidation happening and good fundamentals. Those are the ones that we try to look for, where, the expectation is in the next 2 months, 3 months, 6 months, it will do well. We are not actually looking for something which is going to do well the next week. Sometimes we are lucky that it happens immediately. Sometimes it takes a while, and sometimes it doesn't happen. But that is what we look for in hit picks kind of a scenario.
Okay, okay, great. A second question, going back to the gold thing that somebody asked. Now, the gold financer plays who have been there doing it since long, and one example is Muthoot Finance, which keeps hitting new highs every day. So a similar stock in that umbrella. I mean, any views like this gold loan financing? I mean, I've been looking at it. It appears like a structural play, irrespective of the gold, because gold has reached where it has reached, but it is at a very high price, and people would find it easy to get loans on hard gold, because that's an asset the company will have. So, any thoughts on that?
Yeah, I think very difficult to sort of talk about financial companies without uh, actually uh, getting into the company specific details, because it varies a lot. But there are a lot of some of these small cap companies, or even slightly bigger ones, which are doing quite well in gold finance. But again, uh, it's a different kind of business. Muthoot has been doing it quite well. Others are trying to do well. Banks are getting into the fray. Uh, so yeah, I mean, it's an interesting space to sort of look at.
Okay, okay. Good enough. I'll always have more questions, but in the interest of time and giving others a chance,
Sure.
I'll pause for now. Thank you, Abhishek.
Okay.
And good seeing you again.
Sure. Let me take a couple of questions from the chat, because otherwise they will feel that they've been getting ignored. So there's a question from Ritin Mahajan. Hello, sir. Hope you're doing well. In the long term, we usually have an equity-weighted portfolio 20 stocks, but for a while, the stocks have been around 17. We're holding cash. Can you please elaborate? Are there no reasonable ideas to increase the holdings to 20? Good question. There are a lot of ideas, but right now, if you look at the market, it is very topsy-turvy, and we want to be in a little bit of cash. And as and when I think the market gets a little bit more stable, we can always we can deploy the entire amount. So it's just basically a function of how the market is poised right now. Next one from Siddharth Khandelwal. Sir, any thoughts on the rare earth supply shortage? I think we already talked about this. Next question is from Urmil. Can government shifting to local platforms app, like shifting to Zoho recently, can it help Genesis where maps from Indian companies are preferred? The entire geospatial, there is a regulation which says that, and this regulation is not new, this has been there for a while, saying that it has to be done by Indian companies. So if you look at, say, Google Maps, the entire modeling, etc., is done by Genesis. For other companies, it is done by some other company. So this is not new, something that is yet to happen. It is already there. Okay, next question is from Geeta. Could you please let us know your read on the US stock market as well? Very interesting and very difficult question to answer. My sense is that US is going to be headed higher for the next few months, and then it will probably either consolidate or fall for the next few years. I don't know whether it will consolidate, and how far it will fall. But the very fact that the concentration of growth in the US is now restricted to a handful of companies is not good. If I look at the overall GDP growth that the US is showing, pretty much, I think all of it is coming from the AI capex. And the problem with AI is that there is I mean, till now, uh, there is very little revenue generation which is happening using AI. Right? There's a lot of organizations which are using AI for productivity benefits, cost cutting, etc., for support systems, but not too many are using it for generating higher and higher revenue. And so there might be a slowdown or a pause or something like even a crash in AI before again it sort of revives and resumes and goes up again as a technology, pretty much like what we saw with the dot-com era, right? There was a euphoria, then there was a crash, there was consolidation, and then there was mass adoption. So probably we are going to see a repeat of that cycle. Uh, Short term, US could continue to do well, but something is looking, I mean, it is looking fragile. So when and how far it will break is very difficult to say. But things don't look so well. Next question is from Anant Patel. Hi Abhishek, appreciate you arranging monthly meet as promised last time. What would you suggest if we had X lakh bonus? Would it be open to invest in a long-term portfolio now? Thinking of it as a big lump sum. I would think so. I mean, don't like I always say, don't go and put everything on tomorrow or Monday. Stagger it out. I mean, if you have let's say 100 rupees and you want to invest, do it over say the next 3 months or next 4 months. Just stagger it. Maybe over the next 3 months is a good idea to stagger the money and invest. Next question is from Rahil. Any view on GLP-1 and are we looking to explore the same? Yeah, I've been I've been studying GLP-1 very, very intently for the last 1 year. One is because I want to lose weight. I've been struggling to lose weight for the last 25 years, but I'm scared of needles. So I keep looking for, to see how it, if there are pills which will come, like Orfor is right now in phase 3 clinical trial. So that's something I'm looking out for. And then then I keep telling myself that, let me give it one more last shot to try and lose weight. So this fight is going on, and for a country like India, which is where the diet is so carb heavy, huge number of diabetics, huge number of obese people. GLP-1 is bound to do well. Next year, April onwards, we'll have Sun Pharma and others coming, Dr. Reddy's, etc., coming into the fray with their generic versions. So that's again going to be another big jump, big change in the industry. So obviously, I mean, if we have something to play in the Indian markets, definitely is going to, we're going to look for it. But this is something that I have a great deal of interest, primarily because I'm interested in all new tech, whether it is computing or pharma or anything, any other new tech. So this is part of that. Next question is from Mayank Sharma. Hi Abhishek, sir. Please don't call me sir. Anybody. I mean, I'm not teaching in any college. Neither have I got a knighthood yet. Maybe I'll get someday. Jokes apart, what is the question? How about Coal India and NMDC? There were news recently that they may explore rare earth explorations both within and outside India. Very good. Let them explore. Once they explore, once they find out, once they start doing something, we'll see. Right now, none of them are doing anything concrete. Let them start doing something, then we'll figure out. Next question is from, I don't know, this is GTA and Company LLP. What is your outlook on Nifty for December 2026 for the next 1 years? Very difficult to have an outlook for Nifty, etc. But my sense, again, completely reserve the right to be wrong, but I have this number that I've sort of stuck in my head, which is about 32,500 on the Nifty. Whether it happens in the next 1 year, 1.5 years, I don't know, maybe 2 years, I don't know. But or whether it happens in the next 6 months, I don't know. But that's something that I'm looking out for. Hopefully, it will happen in the next 1.5 years. That's roughly 25% upside from here on the Nifty. But again, I could be wrong. I've been wrong in the past many times. Could be wrong also. Next question is okay. So before I go there, the sense that I have is the opportunity or the probability of the market going up is more from here than it going down. So right now, I think the odds are more in favor of the market going up. The next question is from Arvind KJ. Sir, any thoughts on consumption theme? Have we maxed out on a consumption trend? Not at all. I think India is a young country. It's an aspirational country. I think consumption is here to stay. It is, in fact, I think it is going to grow significantly more from here. What is changing, if you see, is that the basket of consumption is changing. The companies, serving the consumption is changing. So maybe when 20 years back, consumption was sort of synonymous with the FMCG brands. Today, if I look at the FMCG brands, excluding the top 2, 3, there is huge competition in the next segment because there is so much local players. The biggest factor that FMCG had was distribution might. Today, with e-commerce, today with quick commerce, a small local company, has equal reach. So there is so many companies which are doing so well, across consumption, across all the sectors. It's just amazing. If people who are maybe 40, years and above, you remember when we were younger, there was only pretty much, I think, 1 or 2 luggage brands. It was VIP and Aristocrat, and I think Safari was there a little bit, and that's it, right? Today, you look around, go and search in Flipkart and Amazon. There is so many brands. You have Mukabara, you have Urban Jungle, you have so many brands, other than, of course, the older ones as well. Safari has revived themselves. You have American Tourister. Samsonite now is a very, very major player in the last 15, 20 years. So, every aspect you look at, whether it is travel and tourism, has just boomed, right? People are consuming more of those. You look at the penetration of ACs, right? I remember when we were young, households with ACs were like a very, very rare occurrence. People had to be quote unquote lakhpatis at that time to have ACs. Today, even a middle class family, lower middle class family have ACs because it has become a necessity. I was listening to a con call last quarter when some management was saying that tier 3, tier 4, towns, people are buying ACs before they are buying refrigerators. That is something which is amazing. So, in short, I think consumption is here to stay. It is here to, in fact, get bigger, in my opinion. The next question is from Ashwini Chikate. I hope I got your surname correct. I am very new in investing. Can you put some light on index funds for systematic investing? Many thanks. Yeah, I think that's one of the best ways to start investing or of creating a base portfolio. In fact, a lot of my friends who are like you, who's starting investing, who've not ventured beyond FDs in their life and now want to get started, they've been after me. And so what we did, I've always been advocating index funds for people who want to get started, and for people who want to create a base portfolio, a good combination of Nifty Next 50, Nifty Mid Cap, Nifty Small Cap, etc. Combination works really well. So what the team at IntelliSense has done is they've come out with uh, a basket of ETFs, where which helps you actually do exactly this, right? So this is something that uh, I've told all my friends, that people who are starting to invest, this is this is something which is very, very good. We have exposure to gold ETF, silver ETF, global ETFs, all of that in one, and then we keep evaluating it and rebalancing it once every, I think once every month we evaluate it, and we will keep updating it, as and when required. So investing through index funds, ETFs is a very, very good starting point for creating a base portfolio. I think you are absolutely on the right track. Okay, so we've completed all the questions on the chat, and we've completed about 1.5 hours. And there's one Ram Oja who raised his hand. So Ram, please go ahead, and maybe we'll take this as the last question. And if somebody else is not there, yeah, but go ahead. Ram,
Hello.
yeah, go ahead.
Yes, sir. My name Ram. Sir, I'm audible.
Yeah. Please go.
Yeah. Okay, sir. Good evening, sir. Sir, I have a question in regarding quant, as the Q10 and Q30. Actually, matlab, I ask you, Q10 is 20 stocks are there, and Q30 is 30 stocks are there. Can you matlab, reduce the number of stocks like Q10 and Q30? Because of I think it is concentrated portfolio, like this is my thinking. I don't I don't know it is right, it is wrong.
No problem. Ultimately
तो
we learn,
तो मतलब I think suppose कि आप जो Q10 है, can you reduce the 10 मतलब 12 or 15 stocks are there, and Q30 you 20 25 20 stocks are there. तो इसमें क्या, क्योंकि अगर एक साथ मतलब बहुत सारे स्टॉक हो जाते हैं पोर्टफोलियो में, तो अगर इस पे कुछ अगर इफ यू वर्क लाइक सो दिस, क्योंकि
देखिए द आइडिया हमने जब शुरू किया था तो Q10 का आइडिया ये था कि उसमें 10 रहेंगे, 30 का आइडिया था उसमें 30 रहेंगे, बट ओवर अ पीरियड ऑफ टाइम हम भी टेस्ट करते रहते हैं, हम भी अपना स्ट्रेटेजीज अपडेट करते रहते हैं विद द मार्केट की, जो जहां पे जो चेंज हो रहा है वो भी देखते रहते हैं, और उसमें फिर ये देखा कि ये जो स्ट्रेटेजी हम यूज कर रहे हैं उनके लिए रफली अबाउट 15 से 25 स्टॉक्स इज बिकमिंग ऑप्टिमम फॉर बेटर रिजल्ट्स. तो उसमें क्या है कि दोनों, ऐसा जरूरी नहीं है कि आपको दोनों में ही इन्वेस्ट करना है. आप पिकअप करो कि ठीक है मुझे सिर्फ Q10 करना है तो आप सिर्फ Q10 करो, या आपको लगता है कि मुझे Q30 करना है तो आप Q30 करो. दोनों करने का जरूरत नहीं है अगर आपको लग रहा है कि ये बहुत ज्यादा स्टॉक्स हो रहा है. ठीक है, तो दैट इज वन वे ऑफ डूइंग इट. सेम अप्रोच हमने क्विवर में लिया था. क्विवर में इट इज अगेन वेरी कॉन्सेंट्रेटेड, 10 स्टॉक्स हम लेते थे. अभी बिकॉज द मार्केट रेजिम हैज चेंज्ड, हम उसमें भी अभी 15 16 17 स्टॉक्स होंगे. जब मार्केट फिर से बुल फेज में आ जाएगा तो शायद वो हम वापस से 10 में लेके आ जाएंगे.
हाँ, मैं यही बोलने वाला था.
हाँ, क्योंकि उनका बट क्विवर का स्ट्रेटेजी वैसा है. Q10 Q30 का जो हम स्ट्रेटेजी यूज करते हैं उसमें हमने ये देखा है कि 15 से 25 स्टॉक्स में सबसे अच्छा रिटर्न बनता है. ठीक है, तो दैट इज द रीजन. अब देखिए हमारा भी ऑब्जेक्टिव ये है कि हम पैसा बनाएंगे इसमें, राइट. ऑब्जेक्टिव ये नहीं है कि हम 10 स्टॉक्स में ही पैसा बनाएंगे या 50 में ही पैसा बनाएंगे. ऑब्जेक्टिव ये है कि हमको एक रीजनेबल अच्छा रिटर्न बनना चाहिए और रिस्क रिवॉर्ड अपने फेवर में होना चाहिए। तो वो हम टेस्ट करते रहते हैं, ट्राई करते रहते हैं कि किसमें बेटर हो।
हाँ मतलब मैं सिर्फ यही था कि जैसे Q10 में 10 स्टॉक एंड Q30, क्योंकि Q10 थोड़ा आप लॉन्ग रखते हैं, जैसे कोई स्टॉक लिया तो वो 4 महीने 6 महीने इट इज गोइंग ऑन, एंड Q30 क्या है कि जैसे आप विद इन 1 मंथ 2 मंथ में आप मतलब उसको एग्जिट भी कर लेते, तो Q30 इज ओके 10 मतलब 30 स्टॉक।
नहीं, वो भी आप देखेंगे ना कि अभी कैसा है, अभी मार्केट भी वैसा है कि मोमेंटम चल नहीं रहा है।
हाँ
राइट, तो इसलिए वो जल्दी जल्दी निकल भी रहा है। अगर मोमेंटम चलने लगा तो वो Q30 भी आप देखेंगे कि 3 महीना 4 महीना 6 महीना रह रहा है। वो 2020-21 में हम जब Q30 22 में स्टार्ट किया था, उस टाइम पे Q30 में भी ऐसे स्टॉक्स होते थे जो 6 महीना 7 महीना चलता था।
और सेकंड दिस लास्ट माय क्वेश्चन कि सर अगर सपोज Q10 में इतने अच्छे से सपोज आपने फोर्स मोटर दिया था, सॉरी आई डिस्कस द मतलब पर्टिकुलर स्टॉक लाइक ऐसे गोइंग अप लाइक 20 मतलब 21,000 20 एंड अगेन इज केम बैक इन 16,000, तो क्या आप कोई एग्जिट ऐसा कर सकते हो कि एवरी 15 डेज सपोज कोई स्टॉक अगर आप एंट्री नहीं कर सकते हैं तो एग्जिट के हर 15 डेज पे कोई 1 and 2 स्टॉक मतलब एग्जिट करके?
नहीं, देखिए प्रॉब्लम,
हाँ,
मैं समझ रहा हूँ आप क्या बोल रहे हैं।
हाँ,
प्रॉब्लम
हाँ,
इसमें क्या होता है ना कि आपको कैसे पता चलेगा। मान लीजिए आपका कोई स्टॉक है 100 रुपए है आज,
yeah,
ठीक है, आपने 100 रुपए में खरीदा, अब वो बढ़ के 150 हो गया, ठीक है। अब 150 से बहुत जल्दी भाग गया, तो आप देख रहे हैं कि हाँ ठीक है, बहुत जल्दी भाग गया। अब उसको वो कभी भी करेक्ट कर सकता है, थोड़ा तो आपको करेक्शन करने का उसको मौका देना चाहिए, राइट। तो वो 150 से मान लीजिए 145 आ गया, तो आप क्या करेंगे? आप निकल जाएंगे उससे कि आप होल्ड करेंगे कि 145 का 160 हो सकता है? तो
maybe इस
वो
momentum
कॉल
है
जो
तो
है ना,
शायद
वो बहुत डिफिकल्ट होता है,
difficult होता
क्योंकि
है।
हमने फोर्स मोटर्स में मेरे को याद नहीं है कितने प्राइस में लिया था, बट
हाँ,
लेट्स फॉरगेट फोर्स
हाँ,
मोटर्स, लेट्स
हाँ,
से हमने 100 में कोई स्टॉक लिया और वो 150 चला गया, ठीक है। अब 100 से जब वो 125 गया, तब भी हम निकल सकते थे कि हाँ बहुत जल्दी भाग गया। तो वो जो है ना, वो बहुत डिफिकल्ट चीज है। वो हमेशा हमको ना हाइंडसाइट में ही पता लगता है। ये आज आपको इसलिए लग रहा है कि वो 20-21 हजार से 16-16,500 आ गया है। अगर वो 21,000 से 25,000 चला जाता तो आपको लगता है कि यार ये तो और भाग गया। तो ये बहुत डिफिकल्ट है टू फिगर आउट व्हाइल इट इज हैपनिंग। तो आपको थोड़ा सा उसको एक विगल रूम देना पड़ेगा कि भाई वो नीचे थोड़ा आ भी सकता है जब इतना जोर से भागा है। हाँ, एक डिफरेंट स्ट्रैटेजी हो सकता है कि एवरी हम लोग एक्चुअली इसको हर वीक देखते हैं। 15 दिन तो ज्यादा हो गया, हम लोग हर वीकेंड देखते हैं इसको, स्ट्रैटेजी को रन करके। बट यूजुअली जैसे हमने स्ट्रैटेजी डिजाइन किया है, मंथ एक मंथ एंड के पहले हम एग्जीक्यूट नहीं करते, बिकॉज कई बार ऐसे होता है ना कि वो मंथ के बीच में नीचे आके फिर ऊपर चला जाता है।
yes, yes. Okay, sir. Thank you so much. Sorry, I asked
नहीं
you
नहीं,
for
नो
that.
प्रॉब्लम, थैंक यू।
Okay. Thank you so much.
Okay, there's another question again from Ashwini. Please put some light on your portfolio management service. So you have a PMS called Sri Rama Managers, where we have two funds, Sri Lakshmi and Sri Vriddhi. Sri Lakshmi is a long-term oriented, growth-oriented portfolio. Sri Vriddhi is a concentrated, quant-based momentum portfolio. These are the two funds that we run. The minimum investment in the PMS is 50 lakh rupees. And I always suggest that anyone who comes in, divide their capital into, if you're putting in 50 lakhs, put 25 in Sri Lakshmi and 25 in Sri Riddhi. Because over a longer period of time, the two styles or the two strategies are complementary to each other. So they will perform differently at different times. And, that's basically the way, that's the thing about the PMS. If you need more details, do drop a mail to us and we'll be happy to share, more details. Okay, 9-10, maybe. So Geeta, can we see the performance of the two PMS funds on the website? Yeah, definitely. You can go to srirama.co.in. You can see all the details that you want. If you have fact sheets, performance, everything there. There is there any other question from anyone?
Hi, sir. So just one question. I know it's 9:10, so I'll
No,
just try
sure.
to be
No,
quick.
go ahead. Yeah.
It's always thank you for conducting the session. It's always wonderful to hear from you. Though I have been following you on the YouTube and all your channel talks that you do. So thank you for that. Just one quick question regarding you mentioned risk reward. I was just checking some things and what are your thoughts on? I don't want to ask about a particular company, but what are your thoughts on cash management sector? It seems like it might be in consolidation phase with supply side consolidating. So from that mental model perspective,
So cash management as in CMS and those
yeah. I don't want to take the name of the company, but yeah.
Actually, I have no view on those. I mean,
okay, because I know
honestly,
you're interested in
I'll tell
high
you
growth.
very simply. I don't think that cash management as a business is going to grow at 25-30%
Right.
for the next 10 years. It does not even have the potential to do that, right? So there are 5,000 companies, out of which maybe there are 200 to 300 companies where there is this potential of growth of say 20-25% for the next 8-10 years, which is possible.
Right.
There are others where that possibility is also not there. If the possibility is not there, फिर अपने दिमाग क्यों लगाओ?
नहीं ठीक है सर, मैं समझ गया. मुझे पता है आप वो 11 प्लेयर हैं अपनी टीम में, तो वो बेस्ट
Exactly. अब वो 11 प्लेयर है, 11 ही चाहिए, मैक्सिमम 16 चाहिए इधर उधर से, मतलब रिप्लेसमेंट करने के लिए. उतना सब जगह पे दिमाग लगा क्या क्या
नहीं सर, मेरे को पता है आपको हाई ग्रोथ वाला बेटर है. मैं तो बस रिस्क
सब में बनेगा ना, अल्टीमेटली पैसा तो उसी में बनेगा.
राइट. थैंक यू सर, थैंक यू सो मच. थैंक यू.
Sure. Okay, thank you. I think there are no other questions, hopefully. And if there are any other questions, feel free to drop an email, and we'll again reconnect maybe in the next quarter, maybe January. And thanks all of you for joining. And
Just
anybody?
Yeah, really sorry to disrupt, sir. I had a off-topic, not related to this session. Can I get your email ID so I can connect with you for that question?
Yeah. You can email us at our equity@intelsense ID itself.
Okay, sir. Okay, equity@intelsense.in.
Yeah.
Okay, thank you, sir.
Yeah, thank you. Thanks all. And greetings for Diwali, advanced greetings for Diwali, and a happy new year to all of you. Thank you.